Yeah, yeah. Hello and welcome to BQ. Hello and welcome to BQ Prime. A very good morning to all the viewers. I'm Hira Dadia and you're watching Stocks in Focus. Overall, if you see in terms of where markets are concerned, after Monday's close, the kind of sell-off that we had seen, the anticipation was that on the back of the global meltdown, we will see pressure that would continue. Though it's interesting to see how we opened in the positive, and we are seeing cuts, but it's a pretty flattish move we are seeing. Sensex is down around, say, 50 to 55 points. And if you see in terms of Nifty 50 as well, overall, clearly we're trading below the 19,300 mark. So again, not too much of a euphoria that has continued, but clearly the downtick continues. It's interesting to see how the metal names have been the top gainers today. Hindalco, Tata Steel, JSW Steel seeing smart moves in today's session, and this is on the way China has been panning out so far. If you talk about losers, you have names like Apollo Hospitals, Cipla Pharma names are the top losing names as well in today's session. NTPC is under pressure. HDFC Life seeing cuts of almost 1.3% in trade. Let's quickly look at a few of the broader market gainers. A Bajaj Consumer, a 10 to 11% move coming in there. NIT Limited, Amber, Sequence Scientific, a few of the other gainers. On exchange, Vector Foods, that has been trading under pressure. MMTC has been seeing pressure over the last couple of trading sessions. Sirma is down in trade. And one more counter, which is down and about, is a JSW Energy. If you talk about JSW Energy, the stock has been trading with cuts, and this is in spite of the earnings, wherein the profits surged over 87%. In fact, after reporting numbers, the stock saw some gains of 3% in terms of Monday's session. And from here on, it's going to be an interesting journey for the company as well, because there is positivity from here on. The Mitra acquisition, the merchant sales power, all of them have actually powered the Q2 numbers, and it seems that the company is in an expansion mode as well. In fact, the joint MD and CEO of the company, that is Mr. Prashant Jain, spoke to my colleague Neeraj Shah. Let's listen in to what he had to say as well.
The power sector was not in the limelight because there was not enough investments which were taking place into the sector, and also JSW Energy was also not growing because the sector was not growing that much. There was an overcapacity. But in the last 2 years, we undertook this growth journey, and now that is showing the results, and that's where the earnings are going up. So it's on the predictable script.
Okay, let me try and talk about the few things that surprised the street at large, and would love your view there. So let's start with Mitra and the fact that you were able to do much better on the EBITDA front because of higher PLF, scaling up, what have you, earlier than the timelines that the street was working with. Tell us a bit about what's happening there, and are you slightly ahead of what you may have guided as well?
Yeah, we are ahead of what we have guided for most of the stuff. And because, we have a very strong execution capability, O&M capability. We have one of the best balance sheet, and all that reflect in our lower financing cost, lower O&M cost, higher generation, and better capacities put on the ground quickly. So in case of Mitra, it played out absolutely like that. There was a lot of capacity which was down, which we put onto the stream very quickly. We reduced the losses, we reduced the O&M cost, all that reflected in higher generation, lower cost and lower finance cost by refinancing, and then everything showed up as a result.
Got it. How does this move ahead, Prashant? Because you would have some idea about, I'm talking about Mitra right now, then I'll come to the merchant power piece in a moment, but with this in particular, for the next, let's say, 6 to 8 quarters, what's the run rate? What's the guidance? Tell us a bit about what happens next.
So on a fully loaded capacity, on a normalized EBITDA, we had guided to the street that FY25 EBITDA will be 1650 odd crores. And so we will achieve and do better than that next year. And a majority of that will be seen in the current year itself. So we are quite confident of doing better than what we have guided to the street.
Yeah, that must be music to the ears. You will do a majority of that seen in this year. You will do better than what you guided for. All of this is good triggers for both FY24 and FY25. So thanks for giving that clarity. The other aspect is something that you've told us a number of times, which is the power deficit that could come in because of the lack of thermal power capacities that have been added, and the renewable power capacities coming with a bit of a lag. Now, you benefited from merchant power sales in this quarter, presumably, and the street is talking about how your capacity, merchant power capacity getting commissioned very shortly, will only add to the luster. Tell us a bit about both.
So, the power deficit is here for sure, and we are seeing double-digit power deficit on a peak power basis now, and that's going to continue because current year the power demand is up by close to 7%. Last quarter you saw 13% power demand growth. October month it is 19% up, and the grid is around 200 gigawatts. So if you are talking about this kind of a size, you need large capacities, and they have not been put up, and then this is putting a serious challenge going forward. So going forward, we see that the merchant tariff will be elevated for sure, but at the same time, we are.
So that was the management of JSW Energy clearly giving out their roadmap as well from here on. But moving on, another company that reported numbers is a PNB Housing Finance. Clearly a strong second quarter on all fronts. In fact, brokerages have turned bullish as well on the counter, and this is mainly on the back of the sharp cleanup and the kind of guidance that we're looking at on the back of declining cost of borrowing from here on. To discuss more, joining us on the show is Girish Kousgi, MD and CEO at PNB Housing Finance. Girish, good morning and welcome to the show, and congratulations for a spectacular set of numbers.
Thank you so much.
Girish, my first question coming to you is, was this something on the expected lines in terms of the second quarter? Because across parameters, we have seen an improvement. And this is on the back of the successful execution of the renewed retailization strategy that you had embarked upon.
I think it is exactly as per plan. So we had to do a lot of work internally to try and get growth back, to improve profitability and also raise capital. So in last 1 year, we raised capital. We got back growth. We worked on corporate resolution. We grew corporate book. And there was growth in both disbursement as well as book. I had mentioned earlier the disbursement growth would first show up, and then the book would catch up. So we had guided a book growth of about 17 to 18% this year over last year, and that is on track. So we'll be able to show growth of 17 to 18% on book by March. On disbursement, we had said we would grow at about 22 plus percentage. We have reached, on retail, we've reached about 18%. I think even that guidance is on track.
Right. So overall, with all of this said and done, clearly a 17% growth in terms of FY24 is what you're eyeing. And this is despite the subdued credit growth that we've seen in the first half of 24. What is that roadmap journey going to look like? Do you think 17% you're absolutely confident of, but anything better than that can be achievable?
No, I think this year anything better than 17 would be 18. I think that is the guidance for this year. I think from next year onwards, we may have to look at how this year pans out, and then we should look at what could be the growth. Otherwise, I had said for next 2 to 3 years, 17 to 18% growth looks comfortable for PNB Housing.
Right. Now, we're talking of the large corporate account resolution as well, which has helped you then utilize a lot of your, balance sheet, clear out the balance sheet as well by write-offs in the retail book, right? Apart from that, how are you seeing the process in terms of, further on the asset quality front?
So if you look at the asset quality in terms of GNPA 1 year back, it was over 6%. And today it is 1.78. So what we talk about, this large account accounts to only 1.23% approximately. So even otherwise in last 4 quarters, there has been consistent decrease in GNPA. our focus has been more on collection and improving efficiency. So our focus would be there on asset quality from improvement point of view, and we would largely focus on efficiency improvement and collection.
Okay. And you have moved to a smaller ticket size, exited some of the locations. So, how is that strategy expected to pan out? What is it now, and how does it look like going ahead?
So we are doing a couple of things. One is within Prime, we are moving to a segment where we can build book at a higher yield, so which is more profitable. So that we have been successful. We have tweaked our product profile, then profile mix, and also in terms of geography as to where we need to focus. That is panning out very well. So that will see a lift in disbursement in Q3 and Q4, which will also aid us to grow our book countries to a level of 17 to 18%. Number two, we started affordable business, which is called Roshni, about 8 months back, and we have reached a book of 750 crores. And very shortly, we'll be hitting 1,000 crores. I think probably we'll be one of the fastest to reach a book of 1,000 crores, in the entire industry. Affordable for us is really panning out very well, and very shortly we'll be close to 100 branches. As of now, we are at 89 branches on the affordable side. And if we look at quarter-on-quarter growth on affordable, even though the base is very small, we are clogging 65% growth quarter-on-quarter. However, on a smaller base, but I think this is really catching up. On the Prime side, we have gone largely into retail, more granular. That is, picking up very well. So we see, a lot of upside which is left for us as a company in terms of disbursement and book in the coming quarters.
Right. When you talk about affordable as well, one of the questions I have for you over here is, Girish, that when we talk to real estate players as well, they are highlighting a probable supply chain mismatch in the affordable segment right now. Because there is a lot of focus that's coming in terms of luxury and mid-sized. So the demand is there, but the supply is not there to match affordable housing. How do you plan? I mean, do you think that could be a risk?
Actually, what we have seen on ground is a little different. I think there is no slowdown on the affordable. In fact, affordable is growing at a much faster pace. But given the ticket size and focus of now most of the banks and HFC, NBFCs on affordable, I think competition has slightly increased. But otherwise, in terms of potential, I think affordable, is a good opportunity for all the players, especially in the housing finance space, to grow their book.
Okay. And clearly, from a cost of borrowing perspective, do you think now it has peaked out? And from here on, how much do you expect a decline, and how much could it actually translate into a potential expansion in terms of the net interest margins?
So on cost of funds, we've been bringing down the cost, and we still expect some scope to bring down cost. With NHB funds coming in, I think it will further go down. In terms of spread and NIM, we had guided 2.5% of spread and 3.5% of NIM. Currently, we're at 3.95, so it could be around those levels, 3.75 to 3.8, 3.9 for next few quarters. But when we give guidance for steady state long term. So whatever margins we have given, whatever guidance on book growth and disbursement growth, I think all these things are achievable.
Okay. So how much of credit cost are you building in terms of FY24 and 25?
So credit cost for this year, we had guided 0.6. So last quarter, that is Q1, it was 0.36 and Q2 was 0.26. I think H1 was 0.31, so 31 bips. So our guidance for this year is 60 bips. And from next year onwards, it will be 40 bips.
Okay. And apart from this, you're also downselling and deleveraging your corporate book. So clearly there is consolidation there. What's going to be the strategy on that front?
I think it's more of a conscious call. We had decided to run down the book to a significant level. Since we saw stress in the NPA pool, so we worked on resolution, bring down the NPA. Now we are left with just one account, which is 68 crores. So we will plan to restart corporate in next 2 to 3 quarters time. And when we restart, it will be in a different format altogether. The focus would be on construction finance, focusing on select developers, select projects in select locations. And we will do construction finance business, which would also have retail linkage. This would enable for us to grow at a much faster pace. So, restart of corporate business is more from a strategic point of view, and within the given portfolio mix, corporate book would always be less than 10% at its peak.
Right. And what's going to be the expansion plan with regards to geographies? Because the East India segment is still untapped for you.
I think in terms of expansion, there's a lot of scope on the affordable side, and to a certain extent, little scope on the prime side. So we would take appropriate, action in terms of expanding a branch network. However, in last 12 months, we have opened 89 new branches only in affordable.
Okay. And if there is a risk to the kind of guidance that you've given, what is it that you as a company will be actually watching out for?
I think whatever guidance I have given, whether it is on disbursement growth or book growth or the margins, we don't see any risk per se, on the guidance what we have given.
Right. All right. Thank you so much for speaking to us at BQ Prime, because, this is interesting to see, the kind of growth that has come in as well. Clearly, the quarter has been strong. The implication of the Raj corporate account resolution, which has resulted in the overall NPA decline, that has been absolutely good. And in terms of, other lenders, the margins have expanded here on significant reduction of credit costs. So that's a positive as well, that the street has been eyeing. Thank you, Girish, so much for joining us on the show and sharing your views. Glad speaking to you, and good luck for the coming quarters.
Thank you.
So that's the management of PNB Housing Finance. Clearly, the kind of strategy they have embarked upon as well after the change in management, apparently it seems that has been working for them as well. And if you see in terms of the stock price performance, today is down almost around 0.9%. That's all that we have on the session. Thanks for watching, and lots more lined up on the other side. Please stay tuned to BQ Prime.